Hey guys, what is going on? Just quickly and briefly breaking down today's trading day. Obviously, it was no news, no news Monday. A lot of high impact news coming up this week. So this was pretty much of a slow trading day, I would say. I was expecting this, to be honest. Price and market open in general, New York open was pretty, you know, slow, choppy. I mean, not choppy, but yeah, it was slow. No volatility, nothing. So I swear to God, I haven't seen market open like that in the past, I don't know, few weeks, probably. Pretty boring. I was waiting for a setup for so freaking long. I marked out so many key areas that I thought it's going to be important throughout the day, and that just did not happen. Uh, he basically, I was, marking out these. I just deleted it because it never got mitigated. These lows that was important for me. Also, I thought we're gonna come down. I mean, so sorry. This one here, where the London lows were today, and this liquidity pool basically here. I had this 1 hour for value gap marked out because I thought it's like we gonna come down and clear out London lows and mitigate this 1 hour for value gap, and from that we gonna reverse back to the upside since the trend was super bullish. Trend is your friend. I always switch to the 4 hour time frame, and I can quickly decide where price is most likely gonna go. We hit what the hell, all-time highs last week, but until it's proven wrong for me, I'm not looking for bearish opportunities unless like a 4 hour or a hourly for value gap get inversed, or even a bigger time frame for value gap get inversed. I'm not looking for bearish setups. Sometimes I do trade like when I'm looking for like a bullish opportunity to price to go down to a certain level, sweep out some lows or mitigate the fair value gap, or just key areas that I am interested in. Sometimes I do take short setups uh, to the point where I'm expecting the reversal. So sometimes, and I think I have a video also that, oh my god, a video also that covers that kind of a setup that I did, I think, a few days or weeks ago. That I had a short opportunity where I think I ended up being on break even, or like I got stopped out at break even for a short setup, and I had the opportunity to go for a long as well because I was expecting the price to reverse from that point. But I'm usually taking, like, if a bullish bias, the trend is bullish. Every confluence proves that it's bullish. I'm not looking for bearish setups unless it's like a super nice setup. Like, I'm not gonna go further with this because I'm gonna explain it in a separate video. I just wanted to cover this trading days trade that I did today. So looking at the chart, I was pretty biased that we are gonna go and continue the bullish movement, even though we didn't have target because we hit all-time highs. This time, when you have such scenario, you can use Fibonacci extensions to like basically calculate your TP, where price can go, or which levels price most likely gonna hit um, when it's bullish and there is nothing to hit. Basically, there is no all-time highs, there are no nothing, basically no targets. You can use the Fibonacci extension and that will show you that usually price go to certain levels basically every time. So yeah, that's a really useful tool. I recommend you to use it when such case is there. I mean, if there is no target, you can use that one also. Anyway, I was looking at the chart. I saw that pretty much all the bullish fair value gaps were respected. So I was like, there is no way I'm gonna go bearish, even though I was expecting price to go down first as usual. That if I'm bullish, I'm expecting price to manipulate to the downside, and then from that reversing, I mean, sorry, go to the downside, and from that reverse, and then go to the original direction. And I usually target not always that my targets are not always like okay this high and whatever high and whatever high. Those can be like further TP points or further partial points or something like that, or full TPs, whatever. But when I'm when I'm trading, my strategy is like we start at a certain point, we manipulate in that direction that I'm opposing direction that I want to take the trade on. So for example, if I'm bullish, I want to see bearish manipulation, manipulate key areas such as London lows, Asian lows, fair value gaps, whatever, and then from that point reverse and continue to the upside, and vice versa. The if I'm bearish, I want to see price manipulate higher or take out some highs or mitigate a higher time frame for value gap at the like above price, and then from that sweeping or mitigating, and then with the necessary confluences go to the downside and continue the trend. So I was expecting price to do some stuff that mitigate this, mitigate that, go down to that certain level, sweep out that certain liquidity pool. That didn't really happen. As I said, it was really boring. I mean, sometimes when it's boring, you realize you're doing something good because you're not burning your capital, you're not taking stupid setups, you're waiting for something. So you come to the market with a plan, with a clear plan, and you're waiting for that plan to be presented to you and execute upon it. So it's not like you come to the market, you decide you want to trade, you decide you want to win, and then you do and take whatever trades you feel like, even though your setup is not there, your confluences are not there, the trend is in the opposite direction that you want to take the trade on. So it's like when you see market is clearly bullish, and then you see a bearish opportunity, and you don't take your time and think about it, you just rush yourself and rush your decision and jump in stupid trades, and then you end up losing, and then yeah, that everybody knows that. Everybody knows that. So, whatever. I had these key areas, I had these important PD arrays marked out, this 1 hour for value gap. I even had, I posted a picture on Instagram, and I had a 4 hour as well that I marked out that never really got. I mean, I think, yeah, it did. Yeah, it did, but really early. It did got mitigated here. This was the one that I highlighted. Above that, that was London lows. That was the only sell side liquidity which were important to me. This part, this relative double bottoms here, and basically that 1 hour for value gap as well, because we had this nice, and nice. It's not nice. It's really disgusting. But this movement during pre-market, and then we just ended this slow movement to the upside. When market opened, we just crushed to the upside, crushed. So it's like, no, wasn't really a crush. It was super slow, super, like no setups presented, and I was about to stop looking at the chart because I felt like, okay, there's no news, as I mentioned. There were no news today. FOMC is on Wednesday, and we're basically just building up liquidity. We are just accumulating and faking out and stuff like that, because price and the market prepares itself for the big movements, gonna happen later this week. So usually around this time, I'm not even trading. I'm not even looking for some stuff, just from like past experience. But if I see some good setups, or if I see something worthful to take, I'll take it. If it's my 100% my setup, A plus setup, all the confluences, all the rules are there, like everything is there, I'll take it. So it doesn't matter if it's no news today and FOMC is whatever day, and I take it. I execute in it on it. Sorry, it's just how it is. So but I did lower my risk because I was aware that FOMC is going to happen later this week, and we had zero news today, and the market is just super choppy. The whole day was shit. I mean, looking shit at least. I am not sure if you guys found something good during the day, or London session is whatever you trade on. But yeah, I was low key expecting this to at least mitigate this 1 hour fair value gap here, and then reversal there, and just targeting the original buy side liquidity. That didn't really happen. We just rushed to the upside. Um, I had this. I had this 5 minute fair value gap here also upon opening, and I was like, okay, if we're gonna come down here and disrespect this fair value gap, I'm gonna take a short until this 1 hour fair value gap, because on the 1 minute, oops, on the 1 minute, Jesus, on the 1 minute, if I would have just closed below, sorry, this fair value gap, I would have taken like a nice, almost the same like this. So for example, oh my god, yeah, that was my initial plan when I saw this choppiness, this slowness, and I was like, okay, if this one gets disrespected, I'm just gonna enter on the closure, 5 minute for value gap closure inversion. Sorry, I'm just gonna place my stop loss at the top of the fair value gap, and I'm just gonna target this 5 minute, or is this the 1 hour? No, this was even the 5 minute below 5 minute unmitigated fair value gap. If you can see that, this was upon market open, and I really wanted to see this area, this fair value gap, to get mitigated to fill this gap. Uh, in order to continue the movement to the upside. That did not really happen, because for me it was really obvious that it's going to happen. It didn't happen. It's fine. But at the same time, as I told you earlier, I'm not earlier, but in the beginning of this video, that it's much better to to not overcomplicate your bias. If you're bullish, look for bullish confluences, look for bullish setups, and don't try and then change your bias just like that. And you were bullish 2 minutes ago, but now you see a short setup and you jump in short, and then it stops you out, and just continue to be bullish, and then it's just a never ending story. Just stick with your plan. If your plan is not there, is your rules and your confluences, and nothing is present for you, you just don't trade. If you don't lose money, it's good. If you lose money, it's and you're not keeping your rules, and you're not following your bias, and you're not keeping your promises to yourself, that's another story. It's I think those are breaking your own rules and stuff like that. It's even more serious or more painful when you like if you're losing. I think it's much worse. Anyway, so at the same time, I was monitoring this 5 minute for value gap. We were really bullish, so we didn't even come back, and we had this like, okay, but I'm not trading. Like, okay, we created these volumish candles, and on the fair value gap, I'm gonna enter, because I don't like. I mentioned you can use the Fibonacci extension if you don't have like an exact target, because all time highs are taken, or all the low points are taken, and we are still bearish. We use the Fibonacci extension, and you target those levels. I'll show you in a separate video. But even though I use and I can use the Fibonacci extension in certain circumstances, I don't really like to jump in like this fair value gap mitigation and continuation, because it can be a fake out. It can be. I really do like trading inversions, mostly because for me it's just more clear. I know where we are going. I know the trend. I know this is going to be a manipulation or some kind of a sweep or fair value gap mitigation, stuff like that. I was focusing on this 5 minute for val gap, because after this movement I thought, okay, we're gonna reverse and then come down, and I'm gonna capitalize on this movement. If we reverse this 5 minute for val gap, we most likely coming for this, and I would have set my stop loss to break even at this equal lows, relative equal lows, free triple bottom here. Break even, and then just let's see if we can mitigate this 5 minute, another 5 minute untouched fair value gap below. That didn't happen, but when I saw these candles, dancing inside the fair value gap, I came to the conclusion that okay, we are respecting this bullish fair value gap for sure. The trend is bullish. We skyrocketed to the upside upon opening, so most likely we are going to, if not if not skyrocket from this point to wherever, but at least we are continuing the movement to the upside, and I saw a really good opportunity. So so sorry. So I saw price was respecting this 5 minute bullish for value gap, and I was looking for my setup. I was looking for a fair value gap inversion, and I was scaling down and down and down to the time frame. Sorry. After these candles, I was really looking. Okay, 1 minute there are zero. This one here, but my target was this one, so I'm not gonna enter this one here. So I mean, it's just a few pips here. You could have said that you could have entered on this candle closure, but if I enter on this candle closure, like, come on, I don't know, if I just rather not trade. I'm always looking for the closest to the inversion, not like, okay, midway to the actual target. So I was scaling down to the 30. Oh shit! I was scaling down. Oh my god, 30-second time frame, and I wasn't able to find any good entries, and I was like, okay, I'm not gonna scale down or lower, because it's just, I don't know, really smelled like forcing a trade. But even though I was pretty concerned, I'm not concerned, sorry, I was pretty sure about my own liquidity after this. For me, this was a clear accumulation here after this big movement to the upside, after market open. You can see the dash line here. So we had accumulation here. We had a nice manipulation to this 5 minutes for value gap here, and then a clear reversal. So my Joe on liquidity, my direction was so, I was so biased that we are going to hit this buy side liquidity. Just created this we just created this high here. So we were like generating liquidity here, manipulating down to at least mitigate this fair value gap here, if not this one, and this big ass one hour to the downside. Sorry. So yeah, I was like, okay, I know that there is no news today. I know FOMC is coming up, and usually prices are either really slow or faking out a lot, so it's really uncertain. So I was sure that I'm gonna enter with half risk or lowered risk. So I scale down to the 15 seconds time frame, and it's really, don't think that I'm trading on the 15-second every single day. But if I have a good bias, if I have good confluences, if the market looks really good, and it's favoring my direction and favoring my idea, I'm gonna scale down, because I really want to see because I was really sure that it's gonna happen. And I entered on this candle closure here. So as you can see, we had a nice accumulation, creating high points here, a lot of stacking up high points, stacked up high points here, here, a lot. Um, we were respecting this 5 minute fair value gap super clearly, so we never closed even like this 1 week. Maybe that was the deepest point. Let's put it that way. That was the deepest point. I saw this biggest volumish candle to the downside, up again, sweeping out all this accumulation and manipulation here, mitigating the 5 minute fair value gap. And with volume, we had market structure shift. We had a nice sweep of liquidity, a higher time frame fair value gap mitigation, market structure shift here. And I had a really nice, I don't even know why I did not mark this out, but it's here. As you can see, maybe I can change the color for now. Let's make it orange. So I had this one here, 15 seconds. I don't really like take these lower time frame or very low time frame inversions, but I really wanted to see the best and most optimal point of entry here. So I entered on this candle closure. As you can see, I can, where is it? Where is the, oh, it's here. So I can put it on. So as you can see, I entered on this candle closure here, and my target was the original accumulation level here. I mean, the only buy side liquidity basically that we had at that time, which were like generated liquidity basically. So I was targeting that. I was thinking about to go on break even here, because usually I, or most likely in normal scenarios, I would have gone to or set my stop loss to break even there. There's lots of equal highs. I just switched back to the 1 minute here. I just wanted to show you the entry on the 15 seconds. So yeah, I targeted this buy side liquidity level, nothing more. You could say that, oh, price went up all the way there, and you owe there, and you could have whatever. This is what I needed. This is what I wanted to see. To be fair, I wanted to see price to go even deeper, and then a deeper point, like a longer reversal, basically. But to have like a decent target or decent RR, it was 1.72 risk reward ratio, with lowered risk. I didn't set my stop loss on break even here because I felt like, okay, if I set my stop loss on break even here, it's just like 0.58. I'm trading with lowered risk. I was just like, fuck it. So I would have stopped out twice before my TP actually. So I'm glad I didn't do that. But I was like, if I don't do, or if I don't set my stop to break even, I'm fine with the loss, because I had a good week last week and two. Like basically, I'm up around like 6K on the month. So I was like, okay, why not? So yeah, that was my trade. I hope you like the video. If you have any questions, or if you have anything that is not clear for you, please reach out to me, even in my like DMs or private messages or whatsoever, or you can comment anything. I'm planning to do some educational videos if you are interested. It's just for my own sake also, so it's not like I'm trying to push you guys or push anything on you. I really love this. I love doing this. I love creating videos. Oh my god, I love talking about this. So it's more like I'm doing it for myself also. So I'm watching these videos back when I'm doing it, or after I've done it. So it's just good for me the same way as it's good for you. I think we all learn from it. Anyway, let me know in the comments or anywhere basically what I should cover, what is not clear, what would you want to see more, or anything basically. Let me know. Hope you like this video. Hope it was useful. I know a lot of you guys didn't trade today. I was about to stop looking at the charts, but I saw this opportunity and I was kind of, interested in this movement. And I was like, if not, but this looked really good. I mean, all my criterias were there. I kept all my rules. All the confluences that I'm usually trading with was there. So I was like, fuck it, why not? I mean, why not? It ended up playing out. What can I say? It was nice, clean, not clean, not nice. I'm lying because it was super ugly. Look at these movements, but beautiful. If you can see, I'm not marking this out now, but if you see, this is a beautiful reversal point. Beautiful reversal point after a 5 minute higher time frame mitigation, fair value gap mitigation, and price never ever came back to this area again with this 1 week here. But other than that, we never touched this area, so it was so beautiful reversal area. I'm glad I took this. Even if it would have been a lose, I would be happy with the lose also, because it looks just good. This could have been like this, or could have been like this, but without news, without any volatility. It's fine. It is what it is. It was choppy, it was slow, it was boring, but we're not here for having fun. We're not here to entertain ourselves. we here we should be here with a plan, a clean execution, and patience, and that's what brings money on the table. Take care, guys. Good luck with the rest of the week, and see you in the next video. Peace out, guys.